channel zones work, we're going to take from these highs and lows. We're going to bring this zone channel over. And as you can see, we hit that zone channel after breaking below. And so we entered into the trade. So this was an uptrend. Once we broke below, we are in a downtrend. I took from this high and used the bottom side of the channel, which indicated right here and here to be a good resistance level. The top line of my resistance zone channel was right here. And so I took a trade down right here. I captured this move right here, got back into the trade right here. Price broke above my zone, so I was a little hesitant, felt like the market might go up a little bit higher using this old zone as a resistance area, but I got into the trade right here. Had a small loss, saw price bumping up against the top part of this zone, so I took a trade down, and that's the trade you just saw when I entered. I'm up 2,300. So based on the idea of old support becomes new resistance, I feel like there's some downward pressure. But on the flip side, old resistance becomes new support. So I'm not really in a big runner mode right now. I feel like I'm in some major consolidation. So I'm going to take the bottoms of here, and you can see I have three bottoms: support, 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 and then I have this lower support for the bottom side of the channel. So I'm going to be cautious right in here off of this, but price might come here and hold also. This is where it gets confusing. You just kind of have to take your trades based on your plan that you've created and set up. And that's why I use the Fibonacci extension, because I'm not trying to hit a home run and have this thing run $2, $3. I'm just looking for about 20, 25 ticks. So again, we were making higher highs up into this resistance line. Then we broke this low right here, which says that it should be into a trend reversal. What do we also have? We're showing a couple lower highs. Potentially this one will come back and make an equal lower high. What do we also see? Well, here was the impulse wave. And right now we're in the consolidation, either for a breakout to the upside or reversal. So I put a Fibonacci just on this little cluster right here. Here's my target, and you can see it kind of comes close to this zone as a support area. And up here is my stop loss. It seems like price came about a tick away from that and has started to fall off. So let's see what the results are. Since I got 10 contracts on this, I'm going to split it up. And one, I'm going to follow the ATR once it starts printing on this side and follow that ATR down. And the other thing I'm going to do is I'm going to take half the position, 5 shares, and start to follow down these Heiken Ashi candlesticks like this and this. So you can see I moved my trailing stop to here just off the Heiken Ashi, and it's got me out. I made about $100. Okay, price just came up to my stop and got me out. And so I'm down in that whole trade $200 or so. Price came back into that zone. I used the bottom of this Heiken Ashi candlestick to enter into the trade. So now I'm going to put my stop and my target right here. And as soon as I did that, we're out up about $700 to $2,600. Price came bound to this lower zone. I'm not aggressively going to buy. I just made 2 trades. I'm going to take a break and reconfigure. All right, so let's take a big look at what's going on right now. Huge uptrend, small pullback, and then maybe trend continuation. And that's where it gets confusing right now. And that's why I trade small trades when I'm using futures. I'm not looking to be greedy and get these whole impulse legs. I've created a system within that to get small wins and have small losses. And that's what you're going to have to do. You're going to have to figure out how trading can work for you without being greedy. So I could take this trade here bouncing off this zone, but I feel like there might be more downside. So I'm just going to wait. I'm going to actually remove this line, and I'll show you why. I'm going to come over here and use these tops and draw a downward channel as a resistance. I think price might come up into this channel before giving us a little bit more downtrend. And here's the thing, I have no money at risk right now, so it doesn't matter if I'm right and the market takes off or if I'm wrong, because I'm not risking anything. It's almost like going to the movies for free. I get to watch and see how this thing plays out and wait for the right time for me to invest my money, where I feel ultra confident with what I'm doing. And so what are we looking at? We're looking at a double top, which is a lower high from this double top back here, right? So we have high, lower high. And if price comes into this channel, it kind of confirms that lower high scenario. What happens with a lower high scenario is we should get lower lows. All right, so now that we're getting into that band resistance, I put my entry right there at the bottom of that Heikin-Ashi, waiting for it to go with the trend, which this is technically my support level, right? So this is my resistance. You can draw a diagonal line for support, break, or technically use a horizontal line at the bottom of this Heikin-Ashi, waiting for a downtrend entry. Okay, you can see that price is already going in the right direction of our trade. And so now I'm going to use this little cluster of candlesticks, 2 candlesticks. I have one target here, and then I have this band down here, which also shows lows off of this support level back here. So I'm going to take 2 stops on this. This will be my lost exit. So from the bottom of this candlestick to this Fibonacci extension level, which is pretty close to the top side of this resistance, is what I potentially will lose versus my target 1 and my target 2. So I'm looking at gaining 2 times the money or 4 times the money on what I'm going to risk. And you can see I'm already printing ATR, so I'm going to pull that down. And as soon as price falls off, I'll probably use these highs and start following the Heikin-Ashi down into my target area. Look at something like this. So you can see I'm already 2 points into the trade. If it comes back against me, I'll make $20. If it comes up here and gets this out, I'll lose $30. Okay, you can see price has moved down, so I'm going to move my target down here to the top of this Heikin-Ashi candlestick. It just got me out, and so I'm going to start trailing this one down a little bit lower. While we wait, just let's look and see what's going on. So we had a nice impulse wave. We had a double top. We had a break lower of this low right here, and then we had another lower. We have another lower low. We have another lower low, and at the same time, we're making lower highs. Now, if we look at this, it was an impulse wave down. We had a breakout back up into a Fibonacci retracement of this impulse wave. And then we had a trend continuation down. So let's examine it another way. What if we have a support range box right here? If we were to duplicate that down, it would look something like this. And so that kind of gives us 3 potential targets, right? You got target 1, you got target 2, you got target 3, target 4, target 5. And so that's where it gets confusing for trading, right? It's like, where do we let greed overwhelm us? And you just have to consider what is the best target for you. Yes, this would maximize the most amount of money, but what is the highest probability that it would reach that low? Is the other question. Now, again, we have very little risk on this. And since I only have 2 shares of this right now because I lost the 3 after following the trail and stop, I think I'm going to be a little bit more aggressive and let this trail down as far as possible, as long as it stays in line with the ATR trailing stop. Remember this support zone we had earlier and I took it off? So we had this range right here. What happened? We came into that range. Good news is currently we're under that, which also then indicates that we are in a downtrend, right? Because if this is a counter trend trade up off of here, then this is leg 1, leg 2 pullback, going into a very big leg 3. Fingers crossed. One thing I'm a little bit worried about is that it is 10:10 on 11/11, which 11/11 is Wednesday. And so at 10:30, we should be getting a report from OPEC. And so I am usually out of the market by 10:15, 10:20. And a lot of times the market doesn't move much from 10 to 10:30. And I like this little saying, it's KYM, K-Y-M. KYM means know your market, right? So I know when they're going to have earnings basically every Wednesday at 10:30. So I trade accordingly compared to that. Yesterday I was trading the SPY, and I'm not as familiar on the SPY as I am on light crude. I know most of the time light crude averages around 200 points. The reason I know that is because I've been trading it for about 10 years. And so it has this little cycle where it'll run up about 15 to 25 points. Now, you get bigger moves, 100% yes, but I'm the average Joe trader. I'm just looking for that 15 to 20 point move. And for me, instead of trying to force the trade to give me 500 points, then I can add to my position, right? Instead of putting the pressure on the market to make me money, I put pressure on myself to add to the shares that I'm adding to the trade, which then says if I add 10 shares to make 20 points, I make $2,000 versus if I do one share, I only make $200. So instead of putting the pressure on the market, I put the pressure on myself to add more to risk. Okay, we're coming back up into this ATR area. And so you can see I'm already below where my entry point is just by one tick. So basically this trade will be flat if it gets me out. Taking another look, I'm going to move my stop up just a little bit off of this high. So actually, instead of making a little bit of profit, I will lose a little bit. All right, so that got me out of the trade, 2,700. And this is where it gets challenging because technically I'm in my resistance zone. And so right here, I should be following an entry place to take it lower. But I'm going to just wait and see what happens. Because again, we're close to 10:30, and so it doesn't make any sense to try to enter a trade for 3 minutes. Okay, while we wait for that, here's the SPY, and so it's ES futures. Basically, you had this zone. We could move this up. You can see this is how you can find your resistance level on the opposite side. You can see how it fits perfectly the same angle and the same zone area from the bottom side. It's amazing. So what do we have right now? Well, if I take from these highs and come down, I feel like that's a pretty good zone angle. Highs, lower highs, higher highs. We have some resistance right there. Resistance, 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 resistance. And so we're definitely in a downtrend. Now for me, just because I'm looking really quickly at this, I have to do one of two things. I have to either wait until this comes into this zone to take a trend continuation down, or wait for price to break over this, pull back, giving me a first over trade, and then take the trade up. And these are the things you have to consider. Where do you want to get into your trades? Do you want to get in and be patient and wait for the trade to come to you for that setup? Or are you trying to take every trade? And you know, that was for me. I was just confusing myself because I felt the mandate of having to trade, right? And I found myself forcing things and losing money because I was forcing it, not taking the average Joe approach of how does the market work, right? Back to Kim, KYM. Know your market. That's why I usually only trade the oil futures. But for educational purposes, I'm trying to show you as many different looks at this channel zone as possible so that you can get comfortable doing this yourself. So if we zoom out a little bit, this is a pretty big zone channel. It'd probably be hard to trade it because it's so big. But we have support, 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 lower support, higher support, higher support, higher support. So overall, it would assume that this is uptrending. But if I dial in a little bit closer, we have support, higher support, lower support. And so we have an uptick off of this channel zone. So price will either come up to this band and fall off. Price will break through this band and pull back. Or price will break below this band and pull back. And that's the great thing about understanding support and resistance. I have no other indicators on here. It's just support and resistance. And all I've got to do is wait for price to come into one of these three scenarios and then take the trade.